So let's talk about building real generational wealth. It really doesn't have to be that complicated. Seriously, forget trying to find the next big stock or timing the market perfectly. Today, we're going to lay out a super simple but incredibly powerful blueprint. 6 specific index funds you can literally buy and hold forever. This is how you put your financial future on a clear, successful path. Let's get right into it. But first, let me ask you this. Do you really, truly need to be a stock-picking genius to get rich? I mean, the news and movies make it seem like you have to find the next Google before anyone else does. But what if that whole idea is not just hard, but maybe the completely wrong way to think about building wealth in the first place? Okay, look at this. It really comes down to 2 paths. You've got the hard way on the left, spending all your time doing research, trying to guess which way the market will swing, and all the stress that comes with it. Or there's the simple way. You just own a piece of the entire market, keep your fees incredibly low, and let time and long-term growth do all the heavy lifting for you. We're going to focus on that simple way. And the key, the absolute secret weapon for this simple path, is the low-cost index fund. See, instead of betting everything on a few individual companies, you buy one single fund that holds hundreds or even thousands of them. Bam! You get instant diversification, which just means you're spreading out your risk, and you get it for a tiny, tiny fraction of the cost. This is the core strategy we're about to unpack. All right, let's start with the foundation, the real powerhouses of the U.S. stock market. These first few funds we're going to look at are all about giving you a direct stake in the biggest, most important companies that really drive the entire American economy. First up, we've got the absolute gold standard, VOO, the Vanguard S&P 500 ETF. Now, an ETF is basically a basket of stocks you can buy or sell with one click, just like a single stock. And this one, it gives you a piece of the 500 largest companies in the US. We're talking Apple, Microsoft, Amazon, the whole crew. For a lot of people, this is the perfect starting point for any portfolio. Now, look at this number. This is what's so amazing. The cost, what's called the expense ratio, for VOO is just 0.03%. Let me put that in perspective for you. For every $10,000 you have invested, you are only paying $3 a year in fees. That is incredible. And over decades, keeping fees this low is absolutely crucial because it means more of your money stays invested and growing for you. But what if you could pay even less than that? I mean, what if you could pay nothing? Well, meet FNILX from Fidelity. This fund is an absolute game changer. It tracks a very similar index of large U.S. companies, which makes it another fantastic core holding, especially if you just can't stand paying fees. And here it is, 0. The expense ratio is 0.00%. No, that is not a typo. You pay absolutely nothing. Zilch. Nada. For anyone who believes every single penny counts, and it does, this is pretty much impossible to beat. Now, maybe you're someone who prefers mutual funds. If so, check out SWPPX from Schwab. The big deal here is how easy it is to get started. There's no minimum investment. So if you want to set up an automatic plan to invest, say, $50 every single month, this fund is perfect for that. It makes consistent investing incredibly simple. And the cost? A rock-bottom 0.02%. That's right, it's even cheaper than VOO. It just goes to show how fierce competition has become and how it's driven costs down for everyday investors like us. It's a huge win because more of your money gets to work for you. Okay, so owning the top 500 US companies is a fantastic start. But if we really want to talk about diversification, we need to go even broader. So this next set of funds is all about expanding our reach, first across the entire US market and then across the whole world. I mean, why stop at just the 500 biggest companies? With VTI, the Vanguard Total Stock Market ETF, you don't have to. This single fund holds over 3,700 US stocks. We're talking large companies, medium-sized companies, small companies, the whole shebang. This is pretty much the ultimate level of diversification you can get inside the United States. But what about everything happening outside the US? And that is where VT comes in. This is the Vanguard Total World Stock ETF. It gives you a piece of thousands of companies from all over the globe, in both developed countries and emerging markets. And this is so important because if the US market hits a slow period while international markets are booming, this fund helps protect and grow your wealth. It is true global diversification in one single fund. All right, so far we've built this really solid, diversified core for our portfolio. Now, let's talk about adding a little bit of a growth engine.
This last fund is a more focused bet on the companies that are really pushing the boundaries of technology and innovation.
And that fund is QQQ. It tracks the NASDAQ 100 index, which means it's heavily weighted toward tech companies and other innovators. Now, this gives it much higher growth potential, but here's the trade-off. It can be a lot more volatile. The ups and downs can be bigger. So it's a really powerful tool, but you just have to understand that it comes with a different risk profile.
Phew! Okay, we've covered a ton of ground. So let's pull all of this together into one simple, clear blueprint. Here is your summary of all 6 of these hold forever funds we've just talked about.
Here it is, all laid out. You've got VOO for that classic U.S. economic backbone. FNILX is your go-to for the lowest possible fees, 0. SWPPX is perfect if you want to automate your investing. VTI gives you that ultimate U.S. diversification, while VT takes that idea and goes global with it. And finally, QQQ is for when you want to add that extra shot of growth and innovation.
If you only take one single thing away from all this, let it be this right here. The real secret to building wealth isn't about making brilliant moves or having perfect timing. It is simply about consistency, keeping your costs low, and giving your investments the one thing they need most: time to grow. It's about betting on broad, global progress.
By using these simple but incredibly powerful funds, you're not just investing, you are building a wealth-generating machine for yourself and for future generations. So really, the only question left is, which of these funds are going to be in your blueprint?